China just unleashed a financial thunderbolt, sidelining the US dollar and cutting ties with tech giants ASML and TSMC. By 2030, the US dollar could lose its throne as the world's top currency, thanks to China's digital yuan gambit. This isn't just about money. China's tech rebellion could make your next smartphone a battleground. Want to know how? Let's unpack the chaos that's coming. China has fired a shot across the bow of global economics. In a jaw-dropping move, Beijing integrated its digital yuan into the cross-border payment systems of 10 ASEAN nations and 6 Middle Eastern countries. This isn't a minor tweak. It's a seismic shift that could redefine how the world trades. For the first time, over 38% of global trade volume, trillions in goods and services, could bypass the US-controlled SWIFT system, which has been the financial world's backbone for decades. Why is this a big deal? The US dollar's dominance gives Washington unparalleled leverage. Sanctions, trade policies, even military influence all hinge on it. But China's fed up. Beijing's mission is razor-sharp: create a financial network independent of the West and elevate the yuan as a global currency. This shields China from volatile dollar swings and US sanctions, which have targeted everyone from Russia to Iran. It's a bold play to break free from Washington's economic chokehold. Let's crunch the numbers to feel the weight of this. In 2022, trade between China and ASEAN soared to $975 billion, a staggering 120% jump since 2013, cementing ASEAN as China's top trading partner. Add the Middle East to the mix, and you've got a bloc handling a colossal share of global commerce. With the digital yuan now coursing through these economies, we're staring at the birth of a new financial era. Picture this: countries trading oil, tech, and grain without touching the dollar. Less dollar demand means less US power, and that could hit everything from Wall Street to your grocery store. But there's more to this story. China's timing is no accident. It's a direct response to President Trump's new tariffs. Those tariffs aim to squeeze China's economy, but Beijing's hitting back harder, using the yuan to carve out a sphere of influence. This isn't just about money, it's about control. If the dollar's grip weakens, US sanctions lose their bite, and global markets could tilt toward China. Your investments, mortgage rates, even the price of your coffee could spike if the dollar falters. China's not stopping there. They're signing trade deals left and right, locking in partners who are happy to ditch the dollar. ASEAN's trade networks are buzzing with yuan-based transactions, and Middle Eastern oil producers are listening. This is a slow-motion revolution, and the US is caught flat-footed. The trade war is no longer just about goods. It's a battle for the soul of global finance. Hold that thought. China's not just shaking up finance. They're detonating a tech bombshell that could leave Silicon Valley in the dust. Let's jump into the chaos. If you thought finance was intense, brace for the tech battlefield. China's made a stunning call. They're cutting ties with ASML, the Dutch titan of chip-making equipment, and TSMC, Taiwan's semiconductor powerhouse. This isn't a polite goodbye. It's a middle finger to the global tech order. In 2023 alone, China pumped $2.6 billion into ASML's lithography machines, fueling their chip ambitions. Now that pipeline's dry, and the tremors are shaking markets worldwide. What lit this fuse? The US played hardball, leaning on the Netherlands to block export licenses for ASML's DUV machines, essential for crafting advanced chips. This move bricked $15 billion worth of equipment in China. No updates, no repairs, no lifeline. It was a calculated strike to kneecap China's tech rise, leaving factories stranded. But Beijing didn't blink. They swung back with a vengeance. Here's where it gets riveting. Since 2022, China's funneled over $75 billion into its domestic chip industry, rewriting the playbook on semiconductors. They've targeted every link in the chain: chip design, wafer production, even lithography tech. China recruited 50,000 engineers, pulling top minds from Huawei, SMIC, and Silicon Valley's brain trust. In just 3 years, they've built a chip supply chain that's 60 to 70% homegrown, defying predictions that it'd take a decade. Now, the plot thickens. China's sidestepping ASML's $200 million EUV machines, once considered the holy grail of chip making. A Shenzhen firm, Carrier, claims it cracked DUV tech to produce chips under 5 nanometers. Case in point, Huawei's Mate 60 Pro, powered by a 7-nanometer chip made entirely with Chinese DUV, shocked the tech world in 2023. Fast forward, and Carrier testing 5-nanometer chips with 3 nanometer in their sights, using AI and advanced techniques. China's not playing catch-up, they're rewriting the rules. The damage? ASML's revenue cratered by 10 to 15% in Q4 2024 after China's exit, rocking Europe's tech sector. TSMC's scrambling too, losing a key market. But this goes beyond balance sheets. China's forging Dragon Valley, a tech empire where they control the silicon, the innovation, and the future. SMIC's global chip market share hit 20% in 2025, up from 5% in 2020. Your next device could be powered by Chinese tech, whether you like it or not. This isn't just about chips, it's about sovereignty. China's betting they can outbuild the West, and the US's tech chokehold is slipping. Every gadget you own is now a pawn in this high-stakes game. Your savings, your home, your future, they're all in the crosshairs. China's turning this tech fight into a full-blown economic assault, and no one's safe. China's playing a ruthless game of economic chess. Beyond chips, they're dumping US government bonds and yanking investments from tech giants like Apple and Nvidia. This isn't random. It's a surgical strike to rattle markets and counter US pressure. In 2025, the stock market nosedived 700 points in a single day, with China's sell-offs fueling the panic. Wall Street's still reeling, and the pain's spreading. The trigger? Trump's tariffs, including a threatened 50% hike on Chinese goods, set off this spiral. China's not backing down. They're hitting back with precision. Beijing's planning 10 to 20% tariffs on US tech products, targeting smartphones, laptops, and components. Historically, China slapped $60 billion in tariffs on US goods, from soybeans to cars. If this escalates, we could see $100 billion in new tariffs, crushing US exporters and jacking up prices for American shoppers. Your next iPhone could cost a fortune. But tariffs are just the start. China controls 60 to 70% of the world's rare earths, the lifeblood of tech from drones to EVs. In 2019, these made up 16% of their exports. If Beijing tightens the screws, US manufacturers could grind to a halt, facing shortages and skyrocketing costs. They've flexed this muscle before. Past restrictions sent shockwaves through global supply chains. Expect round 2 to hit harder. Then there's the currency gambit. China could devalue the yuan by 10 to 15%, making their exports cheaper and dulling US tariffs. This would turbocharge trade with ASEAN and Belt and Road nations, where exports grew 15 to 20% recently. China's carving out markets that don't need the US, reducing their reliance on American buyers. Meanwhile, they're hoarding influence, signing deals that lock in partners from Vietnam to Saudi Arabia. The fallout's grim. A shaken market could spike mortgage rates, tank tech stocks, and gut retirement funds. Goldman Sachs pegged recession odds at 35% in 2025, up from 20%, and it's tied to these policies. This isn't just geopolitics. It's your cost of living unraveling. Every move China makes tightens the noose on US markets, and consumers are caught in the squeeze. Trump promised to save America, but his tariffs are tearing it apart. From job losses to angry allies, the cracks are spreading fast. Trump's trade war is a high-wire act, and he's losing balance. He threatened 50% tariffs on Chinese goods unless Beijing drops its 34% duties. China's response was ice cold. They'll fight to the end, countering with tariffs and dirty tricks like customs delays. Past delays stalled 10 to 20% of US goods, hiking costs for businesses reliant on Chinese parts. Think higher prices for everything from TVs to tractors. The real pain's domestic. Rural unemployment's climbing, and consumer confidence hit a year's low in 2025. In Wood County, West Virginia, where Trump scored 70% of votes in 2024, workers now regret backing him. Federal jobs are in limbo, and locals feel betrayed. Protests are flaring nationwide, with chants of billionaires first, not America first. Cuts to Medicaid, veteran benefits, and soaring electricity and food costs are crushing families who once saw Trump as their champion. Globally, it's a mess. Canada, a longtime ally, ditched U.S. energy deals and pivoted to Europe. Greenland detained Trump ally J.D. Vance in a diplomatic slap over U.S. overreach. The EU's fuming over Trump's 200% tariff threat on wine and alcohol, which could gut their $13.1 billion export market to the U.S. France vowed to hit back, promising to shield its wine industry. Meanwhile, U.S. winemakers see a chance to steal market share, but at what cost? Then there's the bombshell. A 2025 military intelligence leak via Signal exposed U.S. vulnerabilities, implicating top officials and humiliating Trump's foreign policy. Even Fox News, Trump's loyal defender, can't spin this. They admitted the economy's tanking, with no one to blame but policy missteps. Allies are drifting, markets are wobbling, and China's poaching U.S. partners, offering trade deals too sweet to refuse. Trump's silence only deepens the distrust. The dollar's reign is under siege. China's leading a 23-nation bloc to reshape trade, and the U.S. is on the outside looking in. This is the future taking shape. China's not just fighting, they're building an alliance to rewrite history. BRICS now spans 23 countries, covering 55% of the world's population and a mammoth GDP. Nigeria, with a $500 billion economy and 200 million people, and Indonesia, with 280 million citizens, joined in 2025, giving the Global South a megaphone. This bloc's pushing de-dollarization, trading in local currencies to dodge U.S. sanctions and influence. Venezuela and Zimbabwe are diving in, using BRICS to break free from Western financial chains. China's trade pacts with ASEAN, Russia, and the Shanghai Cooperation Organization are cementing alternative markets. These deals could shrink U.S. clout, forcing the IMF and World Bank to rethink their dominance. Nigeria's oil and Indonesia's resources are shifting global energy talks. Saudi Arabia is not the only player anymore. The vision's bold, a parallel economy where the dollar's optional. China's exports to BRICS nations jumped 15 to 20% in recent years, and that's just the start. If BRICS pulls this off, global trade could pivot east, hitting U.S. consumers with pricier imports and weaker markets. This isn't a what-if, it's unfolding now, and the U.S. risks being sidelined in a world it once ruled. China's not the only one pushing back. Japan's sounding the alarm on Trump's tariffs, and their warning could shake the world. Are we headed for economic chaos? The trade war's ripples are hitting U.S. allies hard, and Japan's not staying silent. On April 14, 2025, Japanese Prime Minister Shigeru Ishiba warned that U.S. tariffs could disrupt the global economic order, a rare rebuke from a key partner. Japan, a top U.S. ally, fears Trump's levies threaten not just trade, but the stability of alliances built over decades. This isn't just diplomacy. It's a signal that even friends are bracing for fallout. Trump's tariffs, including a 24% levy on Japanese goods, hit hard, targeting Japan as one of the worst offenders of unfair trade practices alongside South Korea. Japan exported $40 billion in automobiles to the U.S. in 2024, with brands like Toyota and Honda driving that number. Now, these tariffs could choke Japan's auto industry, raising costs for American consumers and threatening jobs in both nations. Ishiba called the move extremely regrettable, warning of a significant impact on U.S.-Japan economic ties. But it's not just cars. Japan's trade minister hinted at exploring various options, including a potential World Trade Organization challenge, arguing the tariffs may violate global rules. Yet analysts doubt Japan's leverage. Nomura's Takahide Kyuchi noted Japan's national security ties with the U.S. leave it with no cards to play for concessions. This puts Tokyo in a bind, retaliate, and risk alienating Washington, or absorb the hit and face domestic backlash. The broader picture is grim. Ishiba urged Trump to consider the tariffs' impact on U.S. consumers and the global supply chain, warning of inflation and disrupted manufacturing. Japan's Nikkei 225 index dropped 2.8% on April 3, 2025, after Trump's tariff announcement, reflecting market jitters. If Japan, a G7 powerhouse, is this rattled, imagine the chaos for smaller economies. These tariffs could fracture the free trade system the US championed post-World War II, pushing allies toward China's orbit. This isn't just Japan's problem, it's yours. Higher tariffs mean pricier cars, electronics, and goods, hitting American wallets already stretched thin. Japan's warning underscores a truth. Trump's trade war risks alienating allies while empowering rivals like China, who's ready to scoop up disillusioned partners. The global order's cracking, and Japan's plea might be the last call to rethink this path. Your phone and laptop just dodged a bullet. Or did they? Trump's latest tariff move is a head spinner, and it's got China and tech giants on edge. Trump's tariff strategy is a roller coaster, and tech's along for the ride. On April 13, 2025, U.S. Commerce Secretary Howard Lutnick announced that smartphones, computers, and electronics, spared from Trump's 125% reciprocal tariffs on China, will face separate levies in a month or two. This bait and switch sent markets soaring. Asia's stock indexes bounced on April 14th after the exemption news, but the relief's temporary. These products are shifting to a special focus tariff bucket, tied to semiconductors and national security. Here's the deal. Trump's probing the entire electronic supply chain, from chips to finished gadgets, under a national security investigation. Lutnick predicted these tariffs will bring production back to the U.S., arguing that critical tech like semiconductors must be made in America. But there's a catch. Beijing retaliated with 125% tariffs on U.S. goods on April 11th, matching Trump's escalation. This tit-for-tat could spike prices for everything from iPhones to gaming consoles, hitting consumers where it hurts. The numbers tell a story. China's the second largest source of U.S. imports, supplying billions in electronics. Apple and Dell breathed a sigh of relief when exemptions hit on April 11th, avoiding immediate cost hikes. But Lutnick's warning, new duties on chips and electronics by June 2025, means the pain's delayed, not dodged. Wall Street saw its wildest swing since 2020 last week, with the S&P 500 down 10% since Trump's inauguration, reflecting the uncertainty. Trump's playing coy. He declined to rule out permanent exemptions but stressed flexibility with some firms, hinting at carve-outs for loyalists. Critics, like Senator Elizabeth Warren, slammed it as chaos and corruption, arguing there's no coherent policy. Analysts warn these tariffs could fuel inflation and dent growth, with J.P. Morgan pegging recession odds at 60%. China's already scouting new markets, but no one matches U.S. buying power, yet. This tech tug-of-war is personal. Higher tariffs could make your next phone cost hundreds more, while supply chain shifts disrupt everything from laptops to EVs. China's not backing down. They're evaluating the exemption's impact, ready to counterpunch. Trump's betting on U.S. manufacturing, but if this backfires, consumers and markets will pay the price. The clock's ticking. June could bring a tech tariff tsunami. This isn't a trade war. It's a fight for the soul of the global order. China's yuan, chips, and alliances are toppling old rules, while Trump's tariffs risk plunging us into chaos. Your job, your tech, your future, they're all on the line. Subscribe, share, and let's keep exposing this unfolding battle. The next move could change everything. Evaporating. With China vowing further retaliation and Trump's team shrugging off turmoil, the world's on a knife's edge. Trump's pause was a tactical feint, not a truce. The trade war's too entrenched for quick fixes, with China's tit-for-tat tariffs proving it's ready to bleed to win. The market's relief rally masks deeper wounds. Inflation's back, and confidence is shot. Consumers, businesses, and allies face a grim reality. Uncertainty is the new normal. This isn't just a policy spat. It's a global power struggle, and no one escapes unscathed. The clock's ticking on those 90 days, and what comes next could tip the world into chaos or force a reckoning. The tech war is redrawing the map of power. China's bold move has shaken the world, but the story isn't over. Your smartphone, your car, your future. They're all tied to this battle. Stay informed, because in a world where chips are king, knowledge is power. Subscribe, share, and let's keep digging into the truth.